Hi, this is Kelley Wright at the Money Show in Dallas, and with me today, it's a pleasure to have Mr. Ralph Acampora, the godfather of technical analysis. Ralph, interesting market. It's been an interesting market for a while. There's a lot of terms that people don't use so much anymore. One of them is leadership. One of them is breadth. Okay, this is kind of old school stuff. Tell me about breadth in the market. Is it broad? Is it narrow?
Well, first of all, breadth. That's spelled B-R-E-A-D, as in David, T-H, means the depth of the market.
Right.
We all concentrate and look at, and we know by heart what the Dow is doing, what the S&P is doing. But stop for a second. Those are really large cap blue chip stocks.
Correct.
Okay. I call them the generals.
The generals,
okay.
right.
So the general goes into battle. What does he need? He needs the foot soldiers.
That's right.
He needs the army. And that's the rest of the stocks on the that are listed, okay?
Right.
So to have a successful campaign, you need the leadership and the army going in the same direction.
Okay.
And that's called a fully in gear market. When you got, let's say, the Dow or the S&P, or both for sure, making new highs, followed by new highs in breadth, that says everything is moving in the right direction.
So, for those who aren't as ensconced in this vocabulary, breadth could be in participation. Okay, you've got more stocks participating than fewer stocks.
Exactly.
Okay, so what has breadth been like, say, in the since, let's say, the first of the year? Has it broadened? Has it narrowed?
Yes. Oh yes.
Okay.
In fact, while the Dow has been making new highs recently, so has the breadth been following through.
Okay.
So, as far as I'm concerned, it's a fully in gear market. As long as we continue that way.
Okay.
And there are no what we call negative divergences, where you get the Dow going up and breadth's flattening out or going down, then I'm going to have a little problem.
Okay. Well, because I know of it, earlier in the year, I mean, there was a lot of concentration in a handful of stocks.
Yes.
Okay. So the fact that has broadened out and we're having a greater participation, that's a positive.
Yeah.
That's a good thing.
Yes. And then you look at other things other than breadth to show you if markets broadening out. You look at the small and mid cap indexes, like the Russell 2000, the S&P mid cap, and they, up until recently, were making new highs. So that was again participation, to use your term, and that's healthy. But I'm starting to see a little bit of a slowdown, a little bit of loss of momentum in some of the other areas. So keep an eye out on the
So if the small and the mid caps start to narrow, it's a kind of an early warning system.
Normally, that's what happens at market peaks. And usually the first to roll over are the army. It starts to leave the battlefield, so to speak. Yeah, and that's usually what happens.
I could do this all day long with this gentleman. Ralph, thank you so much.
Thanks, Kelley.
It was a real pleasure.
Great.
This is Kelley Wright at the Money Show in Dallas. Thank you for joining us.